If you invested $10,000 into NVIDIA stock just 3 years ago, you'd have over $120,000 today. And if you invested that money into Palantir, you'd have almost $250,000 right now. That's because these companies have the perfect products for the fastest growing markets. But NVIDIA and Palantir are two of the most well-known companies on Earth. So in this video, I'll highlight 3 smaller AI stocks set to win big, but that almost no one else is talking about. Your time is valuable, so let's get right into it. First things first, I'm not here to hold you hostage, so here's what I'll be covering up front. Coreweave, a neo-cloud company with 250,000 GPUs being used by OpenAI, Microsoft, and Meta. Nebius, a full-stack AI cloud for sovereign AI and sensitive data across Europe and the US. And IREN, another neo-cloud with almost 3 gigawatts of power to use for AI data centers. And of course, which of these 3 stocks I think is the best buy right now. I want to make the best use of your time, so let's start with what all these companies have in common, like their markets, their revenues, and their risks. Coreweave, Nebius, and IREN are all neo-clouds, which means they all sell access to high-end GPUs and infrastructure optimized for high-performance computing and AI workloads like training, fine-tuning, and inference. Neo-clouds have 3 main kinds of customers: AI labs building foundational models, enterprises adding AI to their applications and workflows, and hyperscalers that need extra capacity when compute demand exceeds their own supply. All 3 kinds of customers care about different things. AI labs need massive amounts of parallel compute for model training, enterprises need high bandwidth, low latency AI infrastructure to power inference workloads across lots of users, and hyperscalers care about availability and uptime to keep their own customers happy. In fact, neoclouds exist because traditional hyperscalers like Amazon Web Services, Microsoft Azure, and Google Cloud were originally built around CPU-centric workloads, like web servers, databases, processing transactions, email, and reporting, all of which are still critical for business today. But those general-purpose servers are too slow and too expensive to run modern AI models at scale. So the market needs a new class of cloud infrastructure provider, with a hardware stack built around dense racks of GPUs, connected by very fast networks and advanced cooling to squeeze the most performance out of every rack and every watt, with software that's focused on AI training and inference over hosting websites and databases. At the start of this video, I pointed out that NVIDIA and Palantir made investors rich because they have the perfect products for the fastest growing markets. Well, the global neo-cloud market is expected to almost 30x in size over the next 8 years, and it could become a $1 trillion market by 2034. That would be over a 50% compound annual growth rate for the next 8 years, which is 3 times faster than the growth of the S&P 500. That sounds crazy until you realize that traditional cloud computing is already more than $1 trillion market today, and will be 3 to 7 times bigger by 2034. So the world just needs a massive amount of compute, and about 20 to 30% of that will belong to AI. That's the market that Coreweave, Nebius, and IREN are all operating in, which means their businesses run roughly the same way. For example, all 3 companies spend massive amounts of money upfront on land, power, GPUs, and data center infrastructure, so they all need access to low-cost capital, like debt financing, convertible notes, or equity, to fund their buildouts until their cash flows can fully catch up. That makes them sensitive to interest rates and market sentiment. And all 3 companies make recurring revenue when customers rent out that infrastructure, either by the hour or through multi-year commitments. That means their margins depend on how full they can keep their GPUs utilized, how well they control their hardware and power costs, how fast they can turn their capex into rentable capacity, and their pricing power versus Amazon, Microsoft, and Google. Speaking of which, they also have the same strategic risks, like directly competing with AWS, Azure, and Google Cloud, which are spending hundreds of billions of dollars a year each deploying and renting out their own AI infrastructure. And on the hardware side, they all overwhelmingly rely on NVIDIA for around 90% of their GPUs, with only a small slice coming from AMD. So if NVIDIA prioritizes the hyperscalers or has supply chain issues, all 3 companies will see delays in their own AI buildouts and the revenues and profits that are tied to them. They also share serious customer concentration risks. Coreweave, Nebius, and IREN all have multi-billion-dollar agreements with Microsoft, and those first 2 also have huge multi-year deals with Meta. And of course, they have the same physical bottlenecks, like finding megawatts of cheap, reliable power near high-capacity fiber. so each company lives and dies by their ability to lock down land and power at scale before their competition, including the hyperscalers that they depend on for huge chunks of their future revenues. I wanted to cover the risks up front because Coreweave, Nebius, and IREN are all still relatively small, which makes their stocks very volatile, and you need to know that going in. But that's also why they have huge upside potential, especially since they're all chasing one of the fastest growing parts of the entire AI stack. And now that you understand what these companies have in common, let's dive into how each one is actually innovating as they compete for the AI infrastructure throne. But the biggest innovation I'm investing in is Generated Assets by Public, the sponsor of this video. Public is a platform for people who take investing seriously, and their generated assets can turn any idea into a custom portfolio with a single prompt. I think this is the future of personal finance. Here, check this out. Say I want the top 10 AI and semiconductor companies worth over $300 billion ranked by their free cash flows. So AI companies that are big, profitable, and efficient. Then Public's AI scans thousands of stocks, builds a custom index around my idea, and explains why each stock was included. It even picks the weights. From there, you can modify your prompt, manually add and remove specific companies, and even backtest your idea versus the S&P 500 to see how it performs. Then when you're ready, you can invest in the whole portfolio with the push of a button. On top of that, Public lets you invest in stocks, options, crypto, bonds, and has a high-yield cash account, all in one app. And right now, Public is offering an uncapped 1% match when you transfer from another platform. So if you want to turn your ideas into investments, you have to try Generated Assets by Public using my link below today. I'm super impressed. Alright, let's start with Coreweave, ticker symbol CRWV, because they're currently the leader of the pack. Coreweave operates 41 data centers purpose-built for AI, which hold over 250,000 NVIDIA GPUs combined across North America and Europe. They have access to well over half a gigawatt of active power and almost 3 gigawatts of contracted power capacity. NVIDIA's Blackwell racks take around 120 kilowatts each, so Coreweave has enough contracted capacity to power over 24,000 racks, or more than 1.7 million GPUs. Then they sell access to those GPUs either as bare metal chips or full-stack instances managed through the cloud. Coreweave can spin up clusters of GPUs, add in high-throughput networking and storage, and schedule large training or inference jobs, all without touching the physical servers. As of their latest earnings call, Coreweave's quarterly revenue came in at $1.4 billion, which was up a whopping 134% year over year. But the special thing about Coreweave isn't their revenue growth. It's their revenue backlog, which just reached $55 billion after growing 271% in a single year. That growth is driven mostly by multi-billion-dollar, multi-year contracts with companies like OpenAI, Microsoft, Meta Platforms, and NVIDIA. In fact, Coreweave has one of the most privileged relationships with NVIDIA in the entire market, and that comes with 3 big benefits. First, Coreweave is effectively the launchpad for NVIDIA's latest chips. They get early access not just to GPUs like Blackwell Ultra and Rubin, but also to the Bluefield 4 DPUs and next-generation networking, which tackle some of the big bottlenecks that usually leave expensive GPUs underutilized. Second, they have a formal $6.3 billion partnership where NVIDIA will purchase any unsold cloud capacity from Coreweave through April of 2032. In fact, right as I'm recording this, NVIDIA and Coreweave announced that they're working together to build out more than 5 gigawatts of AI factories by 2030. That's enough power for millions of NVIDIA GPUs. As part of this partnership, NVIDIA invested another $2 billion into Coreweave stock at $87 per share, which isn't much lower than Coreweave's current price. And third, Coreweave was already NVIDIA's biggest public investment by far, representing over 85% of their public portfolio before this deal, and something like 95% after. So for investors, the takeaway is simple. NVIDIA isn't just Coreweave's core infrastructure supplier. They use them as a launch platform, they're the financial backer, and they're the buyer of last resort, which massively strengthens Coreweave's position in the market. Alright, let's cover Nebius next, ticker symbol NBIS. Nebius is a neocloud with a very different angle. They're a full-stack AI cloud leaning into sovereign AI and regulated workloads. For example, healthcare, where training and running models on medical images, clinical notes, and patient records has to comply with health data regulations, or financial services, where fraud detection, risk models, and trading systems need to touch bank transactions and customer data, so they have to comply with regulations for banking and securities. As of their latest earnings, Nebius generated about $146 million in revenue, which is about 10% of Coreweave's revenue. But Nebius is growing revenues almost 3 times faster, 355% year over year, with their core AI infrastructure business growing closer to 400%. Their management is targeting a $7 to $9 billion revenue run rate by the end of 2026, which would be a 13x in revenues by the end of this year. About half of that is already under contract. While Coreweave has the lead on GPU count, Nebius has the lead when it comes to their AI cloud platform, which is called Aether, and it has a full software stack for training and inference, including instance management, high-throughput storage, governance, and security controls for companies that care about compliance. And Nebius is still one of the most technically advanced NVIDIA shops out there. They're the first cloud in Europe to run Blackwell Ultra systems at scale, and they're the first one around the world to deploy them with the latest generation of Quantum InfiniBand. That's a pretty big deal. On the infrastructure side, Nebius currently has around 220 megawatts of connected power, which they expect to 4 or 5x by the end of the year. And now, they expect to have over 2.5 gigawatts of contracted power, which is over a 10x capacity gain that would let them power millions of GPUs as fast as NVIDIA can ship them. And similar to Coreweave, Nebius has a huge guaranteed backlog of business, including a 5-year, $17.4 billion AI infrastructure deal with Microsoft, and a separate $3 billion deal with Meta Platforms. So they're selling every bit of capacity they have, and the only thing holding their revenue back is how fast they can bring new data centers online. As an investor, I really like that Nebius is specifically targeting governments, banks, healthcare, and regulated industries that want the best AI hardware while still complying with strict data rules and regulations. That's exactly how Palantir got their start on the software side, by tackling the hardest industries first and then expanding to the broader commercial market once they've earned the trust of some of the biggest enterprises on the planet. And that leaves us with IREN, formerly Iris Energy, ticker symbol IREN. IREN is a former Bitcoin miner that's rapidly reinventing itself as an AI infrastructure company. IREN is building massive renewable power data centers in North America and then pivoting that power to GPU clusters for high-performance computing and AI workloads. On the AI side, they've already deployed over 23,000 NVIDIA Hopper, Blackwell, and Blackwell Ultra class GPUs. And from a power and capacity perspective, IREN already has over 800 megawatts up and running and 2.9 gigawatts of total contracted grid-connected power across the US and Canada. The thing that separates IREN from Coreweave or Nebius is that only a fraction of that power is being used for AI today. Financially, their Bitcoin mining business makes up the bulk of the roughly $500 million of revenue they made in 2025, which was up more than 160% year over year. But that's starting to change. They just won a 5-year, $9.7 billion AI cloud contract with Microsoft to deploy 200 megawatts of new Blackwell-class data centers in Texas, which is expected to generate about $1.9 billion of ARR once it's all fully online. Being able to pivot power between Bitcoin mining and AI data centers gives IREN options in 2 very different markets. Bitcoin mining provides a backup use for their power if AI demand ever weakens or they're still deploying their GPUs, so their resources will stay fully utilized. But AI workloads have much higher revenues per megawatt, and IREN can capture that upside by shifting that power to AI when demand is strong, like with that Microsoft contract I just mentioned. As a result, IREN is guiding for an annual run rate of about $3.4 billion in AI cloud revenue by the end of 2026, which implies almost a 7x increase in total revenues year over year. That's tied to scaling their GPU fleet from 23,000 today to around 140,000 GPUs, which would still only use about 16% of their 3 gigawatt power portfolio. That means they can keep signing multi-billion dollar deals well beyond 2026 as more of that capacity comes online. As an investor, I really like this combination of IREN's flexibility in shifting power between Bitcoin and AI, plus the sheer amount of capacity they already have secured. Alright, before we can decide which of these 3 stocks is the best buy right now, here's a table summarizing everything I covered. But keep a few things in mind as you read through it. I built this table myself by pulling numbers from each company's latest earnings, and I tried to make every row as apples to apples as I could. But Coreweave, Nebius, and IREN all have different fiscal calendars, different contract lengths with hyperscalers like Microsoft and Meta, and they ramped their revenues and backlogs from very different starting points over the last year. On top of that, metrics like the number of GPUs, active power, and even the number of data centers are approximations. They depend on things like which GPUs, how much cooling, and whether you count individual facilities or larger campuses. So take this table as a good way to compare their size and scale, but not as official audited numbers. And now that we have all that context, we can answer the big question: which neocloud company is the best investment right now? And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That really helps me out, and it lets me know to make more content like this. Thanks, and with that out of the way, let's talk about Coreweave, Nebius, and IREN stock. Coreweave is the clear leader of the neocloud pack. They have the biggest revenues, the deepest backlog, the most GPUs, the broadest data center footprint, and direct backing from NVIDIA. So if you're the kind of growth investor who waits for a company to prove its product market fit at scale and have huge partners de-risking their capital spending, Coreweave is for you. Nebius is the neocloud for sovereign and regulated AI. Smaller on revenue today, but aiming for a multi-billion-dollar run rate from massive deals with Microsoft and Meta platforms. And they have a laser focus on governments, banks, and highly regulated industries. If you can stomach some execution risk and volatility in exchange for a shot at owning the Palantir of AI infrastructure, Nebius might be the stock for you. IREN is for investors who like optionality and diversification. They have almost as much contracted power as Coreweave, a multi-billion-dollar AI deal with Microsoft, and they can always pivot to Bitcoin mining to keep their GPUs fully utilized. So if your portfolio is already packed with AI companies that depend on NVIDIA, IREN is a great way to invest in AI infrastructure while also adding Bitcoin exposure into the mix. Personally, I'm happy owning all three, because I believe that neoclouds will play a huge role in the AI revolution, just like I'm happy owning Amazon, Microsoft, and Google. But if I had to pick only one winner based purely on market cap versus their scale, their backlog, their growth potential, and the rest of my personal portfolio, I'd go with IREN, because I really like their flexibility, and I think they're underpriced based on their power capacity and the size of their deal with Microsoft. But if I was a new investor building a portfolio from scratch, I'd go with Coreweave, because they already have the scale and they have NVIDIA as their biggest backer, giving them the best risk-to-reward ratio of the three. Let me know which stock you're buying below, or if you want me to make a deep dive video on any one of them. And if you want to see more science behind the stocks, check out this video next. Either way, thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.